What's happening, everyone? Austin Evans here, your Central Arkansas Realtor, and I am back again this week with local mortgage lender Stephen Reynolds. Stephen, how you doing, sir?
I'm good. Thanks for having
Good.
me.
Yeah, thanks for coming back. I mean, hey, we did great on the last one, I think, at least. I hope y'all liked it. Want to come back for more. We got some more things to talk about and unpack here with the buyer basics, how to buy a home, basically. And so one thing that we'll just jump right into it. So one thing that we touched on in last week's video was getting pre-qualified. And you had mentioned how that was really, when we were talking about assembling your real estate team, that was one of the first things that any home buyer, potential home buyer, should do. So kind of, can you just explain a little more in detail, like what does that mean? What is a pre-qualification letter and why does anyone care to have one?
Sure. That's a great question. So if somebody's going to get pre-qualified, it means that they filled out an application with me. I've had a chance to review their credit. I've looked at their debt to income ratios, and I've at least got a basic understanding of their financials. And I'm saying to the customer, to you guys, to any potential seller, hey, these guys are pre-qualified to shop.
Yeah.
Meaning, I mean, there's still some variables in there, right? There's still some stuff we've got to work out. They've got to select a loan program. They've got to select a property. So there's still some variables, but based on what we've seen, this is going to work.
Yeah, yeah. Let's touch on credit a little bit because I know a lot of people. You may or may not know your credit score can have a big effect, and we'll talk on interest rates a little more in a bit. But when getting pre-qualified, what are you doing when you're looking at someone's credit score? Because I know people will go, well, that's not what my score says on, Credit Karma, for instance. So touch on like what are y'all looking at when you're looking at someone getting pre-qualified?
Sure. When we pull credit, we're pulling a tri-merge bureau. So we're pulling a score and a report from all three bureaus: TransUnion, Equifax, Experian. So we're looking at those three scores and their FICO scores. A lot of times when people are looking at something that they're checking, monitoring themselves, they may be looking at a different scoring model.
Yeah.
The Vantage scoring model is very popular for self-reporting stuff. A lot of banks use it in decision making, but in the mortgage industry, FICO is still the standard. And so that's why the score can vary some.
Yeah.
It's just a little bit different recipe. The Vantage scoring tends to weight revolving credit a little more heavily than FICO does, but that's why it varies. And we do price our loans, make our loan decisions based on the middle of the three scores. So we throw out the highest score, we throw out the lowest score. If you have multiple borrowers on a loan, husband, wife, we go off the lowest of the middle scores.
Gotcha. Okay.
For our qualifying, for our pricing.
Okay. And guys, if none of that made sense, comment below. We can talk to you and really, if you're like, what in the world is a FICO score? I have no clue what you're talking about. We can talk, get with your local real estate team. Just want to throw that in there. But, okay, so someone's like, okay, I'm ready to buy, Stephen, I'm ready to buy. So what's next? What do you need from the potential buyer of the house to just get this train rolling?
Sure. So financials for most people, are pretty basic. We're going to be looking for 2 years W-2s or 1099s. We're going to be looking for most recent pay stubs and a couple of months bank statements to show where any cash to close is coming from.
So if it's co-borrow, do you need everyone's? So both spouses, maybe if they're co-borrowing, need all those for both of them?
That's right. Okay. So anybody that's on the loan, if it's a spouse, if it's a parent that's co-signing, anybody that's on the loan, we're going to need to see those financials.
Gotcha. Okay. So what are some of the, let's say, don'ts once you've get pre-qualified? I know, there's some things that maybe people don't know. Don't do this when you're in the process of pre-qualifying to potentially buy a house.
Sure. One of the biggest ones, and I think it's stereotyped some, certainly in our industry, as we tell people, don't go buy a new car. But what I tell my customers is, don't do anything to change your credit profile. So that means trading vehicles, that means financing furniture, financing appliances. For some people, it may only mean additional documentation. If you open a new account, we'll certainly have to get the new account number, the new balance, the new payment. But for others, if ratios were tight or credit score, it could impact somebody's ability to get a loan.
To close on the house. Yeah. And guys out there, if you're in the middle, and we'll talk on this in a later episode, but if you've made an offer on a house, got the house under contract, so you're in that phase of where you're trying to close on the house, if you go out and go buy that car or go finance that furniture, you may do one, two things. Either you delay closing, so that could be a problem if you're trying to basically close one time, trying to sell and buy all at the same time, and or you may lose out on the house potentially because it could throw those ratios off.
That's right.
Yeah. So what about though, there's sometimes a myth out there, a misconception that people who are 1099 employees, aka they are self-employed, maybe they're a small business owner, or maybe they work on tips even, maybe in the restaurant industry, they don't have a W-2. What about them? Can they get a house?
Absolutely.
Yeah.
It's just different. It's different documentation. If you've got somebody that is self-employed, they've got 1099 income, they work for family. There's lots of different reasons, but we may have to get 2 years tax returns. That's the full tax return. It's not just the first couple of pages.
Yep.
And there is information in it that we're looking for. If you're a lot of self-employed people tend to have lots of write-offs.
Yep.
And so that can affect their qualifying income. And so that's one of the reasons, if you are self-employed, I'm going to want to see those tax returns up front just to make sure that we avoid any pitfalls.
And one last thing here that I wanted to ask about. So I know I've ran into clients who we're looking to close in, especially in a market like we have today, where getting sellers to pay for buyers' closing costs is not the norm. Basically, what's becoming the norm is each party is responsible for their own. Maybe some clients don't have as much cash as they need, and they get a gift from let's say a parent or a grandparent. What is that? Is that allowed? Can you kind of explain what goes on with that?
Yeah, that's a great question. There's a formalized process for documenting gift funds.
Yeah.
Both parties will have to sign a gift letter. We'll need a copy of the gift check, and then we've got to show, source those funds. One of the easiest ways for clients, for donors to gift the money is to make a check directly to the title company for the amount of the gift. We get a copy of the check, and we don't have to get a bank statement from our customer that shows where the gift went in. But we will have to get gift documentation, the letter, a copy of the item, and then a copy of the account that gift money came out of.
Gotcha. Are there any limits on that? On the gift amount someone could gift someone?
No, there's not really a gift limit from our standpoint. There are some gift limits with regards to the IRS. So, if you're concerned about that, I'd recommend, asking your CPA.
Get with your CPA. Yeah, definitely. Yep. So, awesome. Cool. Well, Stephen, thank you so much again for coming back. We're going to have you back on for a few more things we got to talk about. So, everyone out there, again, thank y'all so much for tuning in. If this is your first time again to the Happy Closing Day Real Estate Show, hit that like button, subscribe to the channel, comment below with any questions. Again, guys, any questions. We're here to give as much valuable content out there for anyone out there, whether you're buying, selling, looking to invest in real estate. We want to really just put some great education out there. And so thank y'all so much, guys. Stay tuned. We got some more videos coming here in the coming weeks and some really great stuff heading your way. So thank y'all so much. Have a fantastic rest of your day.